how do you invest your money passively? Now, there's a lot of different ways that you can do this. You can do this in the stock market. You could do this with real estate. You could do this with businesses. You could do this with really anything where now you are researching an investment, a particular investment. You're doing the work to find an investment, and you're not trying to flip it for a quick profit. That's trading. When we talk about active investing, I'm still talking about long-term investing because real wealth is built over the long term. You don't build real wealth in the short term. That's trading, that's speculating, that's gambling. I don't do that. So when we talk about active investing, I'm talking about investing money for the long term, but now you're looking for individual investments that you can invest in based off of your research that you want to hold on to for the long term. Now this could be stocks. You're looking for the right company that you believe will be a good investment. But this comes with higher risk. Like you could go out and invest in the Amazon Corporation. That is an active investment. Now, if you invest in Amazon for the long term and Amazon takes over the world, well, now you're going to see a big return on your investment because that means that Amazon's going to have bigger profits, their stock prices go up, and you're going to make more money. But if the CEO of Amazon runs the company into the ground and now Amazon is losing money and they declare bankruptcy, well, now your investment goes down to zero and you lose all of your money. So you have higher risk, higher potential return, but you also have the potential to lose more money. That is how active investing works. So the way it works in the stock market is now you are looking for individual companies. This means now you're looking for good companies. You're going to be listening to the earnings calls. You're going to be valuing the companies, keeping up with the company, and then see if it's a good investment for you. This is not how most people should be investing, but if it's something that interests you, then this is something that you can do. I like it, which is why I do active investing in the stock market and passive investing. I also actively invest my money in real estate. When I talk about actively investing my money in real estate, I'm not talking about buying a home for me to live in. I'm talking about buying a rental property. It might be a home to rent out to somebody else. It might be an apartment complex. The reason why is because now when I invest in real estate, I'm getting three things. Number one, I can get cash flow. Because now I'm working to buy this property, an apartment complex, a home, that way I can rent it out to somebody else. Now when I can do that, I'm getting cash flow because now the rent that I'm getting should cover the expenses. It should cover the property taxes, the insurance, the maintenance, the management fees, and the vacancy costs. That way now every single month is putting some money in my pocket. That's why I like investing in real estate because it gives me that sort of cash flow. The second benefit of real estate investing is it gives you tax breaks. As an attorney who is not your attorney, I can tell you that real estate offers some of the biggest and best tax breaks that our tax code has to offer. This is why so many wealthy people love investing in real estate. So when people get money, they like to put it in these real estate investments because now the real estate will give you cash flow and it will protect your wealth with tax breaks. And number three is it gives you a hard asset. Because when you take your cash and you save it in the bank, your savings are losing value to inflation. Versus with real estate, over the long term, we have seen real estate values rise. Why? Well, part of the reason is because the cash that we're using to buy the real estate is dropping in value. And second is because if you're investing in real estate in a good area and the demand to be in that area is growing, well, now the value of the real estate is also rising. A third way that you can actively invest your money is to invest in startups. Now, this has become much more accessible now thanks to the internet, but it's still very risky. What you have to understand with startups is that 90% of startups will fail. Meaning most of your startup investments will go down to zero. That's one of the pros and cons of startup investing is that you're probably going to lose money. But if you hit your money on a good startup, well, now you can make all of your money back plus more because you made a good investment. So this type of startup investing is high risk, high potential reward. You got to understand that going in, and you have to understand that most of the time you will lose money. Even when I invest in startups, I know that most of the startups that I work with and that I invest in are going to go bankrupt or they're going to go nowhere. That's just how the statistics work. Now, there are some platforms online that make startup investing like this much more accessible. One of them is WeFunder, one of them is Republic, one of them is Start Engine. Do your own research, see which one you like, and I gotta let you know that I personally am an investor in the WeFunder platform, but do your own research, see the ones that you like the best. Now, the advantage of these new platforms to allow you to invest in startups is that now you can start investing in startups with as little as $100 versus before, if you wanted to invest in startup companies, you would need hundreds of thousands of dollars typically to get started because then you need the money to find the companies and then to fund the companies and then to manage your investments as well. And the last active investment that I want to highlight is paying down your debt. Because paying down your debt is an investment because it's going to give you a guaranteed return. If you have a 6% mortgage rate and you take $10,000 and you pay off this mortgage rate, well, you get a guaranteed 6% return on that money because that's 6% that you don't have to pay in interest on that principal. Just one thing that I want to remind you, that when you do pay off your debt early, you want to make sure that when you pay this payment, that you want it to apply to your principal balance, not your future payments, because if you apply it to your future payments, well, you're just paying next month's payment early, versus when you apply it to the principal, that's less money that you have to keep paying interest on. So now this is where you have to make the decision. Would you rather pay down debt right now, or would you rather use your money to invest it into something that's going to grow? And this is going to depend on your lifestyle, it's going to depend on your risk tolerance, and it's going to depend on what type of goals that you have. If you want to live big and you want to go for it all, well, then you got to take more risks with your money. If you just want to be financially free and not have to worry about money and never have to stress about money again, well, then you can work to pay down your debt, because that's going to relieve a lot of that financial stress. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.